This is Daniela Camboni for Kitco News, and joining me today, he's back, Peter Hug, Global Trading Director of Kitco Metals. Peter, welcome back to the show. You're looking great.
Got a little bit of rest on tonight. Okay.
Well, I wanted to bring you back on, Pete. Our last segment was such a hit. We spoke about obtaining silver coins, premiums, and I think it resonated with so many people that I would like to continue this conversation today with you. I was just looking at some statistics on American Eagle silver coin sales, just crazy with demand coming out of the U.S. Mint. They reported that U.S. bullion coin demand last month up 550% from sales reported in March 2019. These are huge numbers. Can you give us an update on this silver supply situation? Has it got any better or is it worse?
Well, you certainly can tell from the pricing that the wholesalers are offering in the market that it's gotten any better. Supplies of gold and silver eagles and gold buffaloes have been relatively steady over the past 2 or 3 weeks. Supplies from the Royal Canadian Mint have been shut down for 2 weeks. The last report from the RCM is that they are going to start production on Monday. However, their initial production, which will last for the first few weeks, is going to be on 400-ounce gold bars. They're trying to create liquidity in the COMEX after the disaster in the April contract last week, when Europeans couldn't deliver against the COMEX liability because they couldn't get the gold from Europe over to New York.
Right.
So now the CME is allowing 400-ounce gold bar delivery. So the RCM is focusing on producing 400-ounce gold bars, and the other item that they are going to start production on next week is silver maple leaves. Again, by the time they get up to full production, because they're sort of rotational shifts, they're still not working at full capacity, and just sort of covering the backlog of dealer demand is probably going to take them several weeks until they're more or less able to supply the market with a steady stream of product on the small investment grade product, i.e. the silver and gold maple leafs, the 1-ounce gold bars, 100-ounce silver bars. We're probably looking at least a few more weeks before that becomes more sustainable from a production perspective. The U.S. Mint is really something that's a day-by-day thing. They had a coronavirus issue at their West Point facility. There was rumors 2 days ago they were going to stop production, and then they came out and said they were not going to stop production. So it's a day-by-day thing. But currently there is supply coming to the market, although it's not being reflected in the retail premiums, which are still extremely high. I found it interesting that the U.S. government, I'm going to get killed for saying this on air, but are saying that price gouging should not be allowed. And when you see these wholesale distributors that have access to silver eagles at $2 and gold eagles at $3, charging other dealers anywhere from 6 to 8%, and charging on silver eagles $5 to $6 to $7 over, and now these dealers have to mark that up to their retail clients. So by the time it gets to the retail public, you're paying anywhere from $10 to $14 for a silver eagle, and you're paying anywhere from $120 to $200, I saw the other day, on gold eagles, when the cost of these coins is about $50, $60 over spot. So that's an anomaly that's probably going to last again, probably for the next few weeks.
Okay, you just said a lot of important things in those 1-2 minutes there, Pete. So you brought up premiums, and so are you saying that it's fair game what they're doing with the premiums right now?
Well, it's the wholesalers are they're arguing it's a supply demand issue, and it's sort of the old saying, you sort of make the hay when the sun is shining, and these wholesalers, the big wholesalers, they make relatively incidental spreads on eagles and both gold and silver and buffaloes when markets are in normal contango mode and normal supply demand mode. I mean, they might make 10 cents an ounce on silver eagles to their dealer network, and they might make $2 or $3 on their gold eagles and buffaloes. So now they've got a situation where they've got supply. There's big demand from all of the smaller dealers, so they're able to basically increase their spreads 5 to 10-fold. Use the excuse that demand is outstripping supply.
So let me ask you this, Pete, and maybe this is more for clients and investors just stepping into the silver space. I've had a lot of people email me saying, should I be buying silver coins now? Where do you draw the line when it comes to premiums? Because at one point, when do you get your return on investment? So if you're paying, $8-10 over spot, you have to be banking on silver to at least get to, I don't know, back up to at least $30 an ounce. So where do you draw the line when it comes to premiums?
I would never touch a physical product unless I got it on silver. I got it within less than $1 per ounce over spot. That's just me personally. I wouldn't touch gold on a physical basis unless I could get the gold somewhere around 1%. So somewhere between $15 and $20 over spot. And under normal market conditions, products are available at that price point. Again, it really depends on your psychology. I don't happen to be one that is worried of holding my gold in another form, and by that I don't mean necessarily ETFs, but there's two programs in the market right now, both backed by sovereign governments. One is the government of Canada, and the other one is the government of Australia, where they are holding allocated gold, and you can trade that. Through a digital platform at spreads of about 1% either side of the market. That's the way I would put it. There are a lot of people that don't have confidence in having someone else hold their gold. And again, then it comes down to why are you buying the silver bar? Now, if you're buying the silver bar for capital appreciation, if you're paying almost 100% markup on the price, your investment's got to go up 100% before you break even. So it doesn't make any logical sense to buy it in that form. If you're buying it because you think the system is going to collapse and you're going to need this as a method of payment or barter, then you have a different psychology as to why you're buying it, and in that context, it might be worth it for you to pay $10 over spot.
Makes sense. Pete, in your career, and I'm not going to say it's been an extremely long career, but I know you've gone through a lot of cycles. Have you seen this much hunger for silver coins? And why do you think there's such demand right now? Is it just because it's cheap?
Well, yeah, I have seen this. I've seen it, actually, I've seen it twice. I saw it in 79.80, where there was virtually no silver product available anywhere in the market. And obviously, the market itself was considerably smaller from a dealer network perspective. I ran a wholesale trading desk for a bank at that time, trading in metals. And anybody that's my age that was involved back then. I started, as I mentioned many times, in this business in 73, so I was there for the 79.80 rush. We had lineups around our branch 3 deep, around the block, not just around our branch, for people waiting to get in and buy silver. And silver between 79 and 80 ran out in the first 3 months. There was no refinery or no bank that had any physical metal. And what they sold were promises, basically paper promises. They sold what were then called gold and silver certificates. And clients could buy these certificates. They were backed by metal held in accounts by the banks. And then when the market normalized in 1980 and the physical market came back and supply was available, these clients were able then to negotiate their certificates either by selling them in the market or by taking delivery of the physical product and then paying the fabrication fee. So I saw it then, and then I saw it again in August of 2016 when the demand for silver was extremely low prior to August, and coming into the summer, both the U.S. Mint and the Canadian Mint just assumed that the demand level would remain low and didn't produce anything to put on their shelves. And then silver dropped and there was just an explosion of physical demand for silver, and there was no silver bars and coins that could be produced fast enough to meet that demand, and premiums jacked up again to $7, $10 on Eagles. Back then, as I'm saying right now, I wouldn't chase a $10 silver premium for coins or a $15 silver premium. I would, again, it comes down to your comfort level. We offer a couple of products that allow you to invest in something that is backed by physical material, but it is not in small investment size grade. So at least you can lock in your price at these levels, and then you can negotiate for a better premium when the product is available on the market. But the actual physical market, I think, is going to remain tight, and the premiums are going to remain high until full production capacity comes back in on the mints, which I think is still weeks away.
Pete, just final question here. We got news out of Mexico that mining was deemed non-essential, so we're seeing a lot of mine closures there, silver mine closures. Pan American Silver, Newmont announced they're closing down some mines, Agnico. Do you think this will also have an impact on silver prices going forward?
Again, I think it will, but what's so ironic here is that normally in the past, when there's been a shortage of silver physical product in the market, the economy has still been somewhat normalized. So there was still demand on the other side. There was a demand for solar panels, and demand for the jewelry industry, and demand for in the chip industry. Right now, you've got all those industries shut down. So, I think there will be an impact if Mexico's shutdown of their silver mines lasts for, a few months. Take a while to get that back into the pipeline. The other issue is, even if the silver is available in Mexico, the hardest thing in Mexico is not that bad because you can get a truck and drive it across the border. The problem is you can't get a plane. I've got a Hong Kong office that is selling a lot of physical material. The problem is I've got the material, I can't replenish Hong Kong because I can't get it into the body of a plane because there's no planes flying. So that's also another logistical issue. But let's assume, if the other industries are shut down with solar panel, all of these non-essential industries that use silver, even though supply is going to be curtailed by Mexican mine supply, you don't have the demand side on the industrial side to make that up. So it's got to be made up by investor interest. Now, the investor interest is there. Unfortunately, there's not a lot of physical product that the investors can buy. So they're moving into ETFs and into the futures market. So it's not easy to say that the Mexican mine production goes to zero, therefore silver price is going to go higher because of supply. Right. You need the demand to sort of come up as well to sort of mitigate the fact that supply is down. Then I think silver prices will move.
Yeah, no, makes sense. Makes complete sense. Pete, I know how busy, I know you've been working around the clock, so I appreciate you taking the time to come back on. How are things in California?
Well, I live in the Coachella Valley, close to Palm Springs, and I have to, ironically, at least the grocery stores here have normalized. You can go in and actually buy food and toilet paper and eggs. The hardest thing to get here over the past few weeks, believe it or not, other than the toilet paper story that everybody talks about, is eggs. But now they've got eggs out. But what you find here is it just feels like you're in the middle of summer at 130 degrees here because there's virtually nobody on the streets. I mean, even when you're walking your dog, you're running into maybe 4 or 5 people when you're walking a mile and a half in a complex that has 7,000 homes. So it just feels really kind of weird that it just doesn't feel like there's anybody around. So that's sort of a little odd. And the other thing is you want to stay home, you want to stay quarantined for the benefit of everyone, other than when you have to go out and buy your food. But it gets a little stale watching Netflix when you do have some free moments. I mean, eventually you just start to get a little crazy and you want to go out and do something. And unfortunately, that's, I think, still a few weeks away here in California.
Your hair still looks good though. So is Kelly doing your haircuts now, your loving wife, or?
I was lucky enough to get into my dentist to get my bridge fixed, because the last time I was here I didn't have my upper bridge, but the dentist, I got in just before. Now all the dentists are closed. You can't get in unless it's an emergency. So at least I can eat solid food as opposed to what I was doing 2 weeks ago, the last time we spoke.
Well, God bless Kelly for her patience. Living with you 24/7 now, Pete.
Well, I'm
I'm
in my
kidding.
room all by myself, so I can lock myself away. So she's got something.
All right. Well, thanks so much for joining us. We'll talk to you next week. Thanks, Pete.
Yeah, take care, everyone. Bye-bye.
And thanks for watching. We'll have much more for you on kitco.com. You can follow all our news stories at Kitco News Now, or you can tweet me at Daniela Cambone. Thanks for watching.